Hello, everyone. This is Sebastian McMahon from IA Financial Group. I'm on the road, but I'm still here to bring you a review of the week ending October 18, 2024. So, another week, another rate cut by a major central bank. This week, it was the European Central Bank that went with a second consecutive rate cut, a third this year. So, this synchronized rate cutting cycle continues. And again, looking at what markets are expecting and looking at what we see in the data, we are fully expecting this cutting cycle to continue well into 2025 as central banks, major and smaller central banks, are rushing towards the neutral rate. Again, the lone exception here is Japan because they're not fighting this. They have not fought the same kind of inflationary wave that we've seen elsewhere in the world. US data this week again was stronger than expected. So there's a sequence here. Remember that late in the summer, we had a very disappointing labor market report, which was eventually revised higher. But then it started to spook the market, markets started to think that there were higher odds of a recession coming, and some sort of panic struck the market at some point, thinking that, well, the Fed maybe is way behind the curve and they need to cut quickly. Well, since then, revision higher to the non-farm reports. We've had a very strong non-farm report recently. The latest one was a strong beat against expectations. CPI was hotter than expected, and this week it's retail sales that are showing that the U.S. consumer is in much better shape than we expected. So markets have not really revised their expectations towards the Fed this week. There was a revision for fewer rate cuts over the last few weeks, but this week market is likely just seeing this, but looking also at the election that's coming, and maybe waiting to have some clarity on the results of the election before there are some major revisions to what the Fed should do in 2025. But rate cuts at every meeting, or pretty much at every meeting, is what's expected as far as the eye can see here. U.S. election, the wind seems to be turning in favor of Donald Trump recently. It's still a very tight race. The polls are still within the margin of error, but we're seeing a synchronized trend towards Donald Trump in the swing states. So this is putting him in a better position as we're just now 18 days away from the election. So maybe looking at the charts here that summarize everything that I just mentioned here. So the ECB on the left, what you see is that we went from negative rates to 4%. So that was a strong tightening cycle that we've seen from the ECB, and now 3 cuts this year. Looking at the chart on the right, what the market is expecting for the next decisions. So this goes all the way to June 2025. So for the next decision, which is in December, 1.5 cuts. So market is pretty convinced that we will have another cut, opening the door for a 50 basis point cut here. And if you go all the way to the bottom of the right chart, the blue line, the darker blue line, so in the next 5 meetings, 5 cuts are expected. So it's a cut every single meeting. That is the consensus now from the markets, and we would tend to agree with that. We've seen some disappointing data in Europe, especially in Germany, where growth is very stagnant. And when you look at the CPI, so inflation, you see that more than 50% of the countries of the euro area have an inflation number now that is below the target of 2%. And when you look at the euro area as a whole, you see that the CPI also is below 2%. So there's no reason here for the ECB to wait it out. So you have all of the data that supports the continuation of the rate of rate cuts. So again, the synchronized rate cuts that we've seen around the world should be continuing. In the US, retail sales blowing past expectations. This is the ex-auto and gas, so less volatility, and this is in nominal dollars. So gasoline prices have a very strong footprint on retail sales. So if you take this element away, you're left with 0.7% month over month. So if you annualize that, you get between 8 and 9% at an annualized pace. So that's a very strong pace of growth of retail sales, and there was some breadth in this number. So We see that the U.S. consumer is in good shape. So recently, we've seen upward revisions to growth expectations in the U.S. for Q3, for Q4, so for 2025. So the momentum is strong. As I mentioned earlier, markets are not yet revising significantly, at least this week. The expectations for the Fed moving forward. Expectations have been revised higher over the last few weeks, but here you kind of feel now that the market is waiting out the results of the election. And just what I mentioned earlier, the charts here for the presidential elections. On the left, you have six of the swing states. So what you see recently is that momentum seems to have shifted back towards Donald Trump. We're still very near head to head here, 50-50, but still the momentum shifting at this time in the race could be significant. The key question, the key electoral question that will be asked by voters when they go to fill their ballot is not the same for every state. There are some states where the right to abortion is the key issue. For other states, it's written in the state constitution that the right is there. So it's not the key issue, it's the economic issues that are at play. So very hard to call this race. But on the right, you see that the bettors market are starting to feel the wind turning for Donald Trump. Now it's 60 versus 40. The betting odds. It's not 100 versus 0. There's still time for Mrs. Harris to catch up. But as we're heading into the last 2 to 3 weeks, this is a significant change in momentum here. So what we'll be watching next week, Bank of Canada rate decision, a very important one because the door is open for a 50 basis point cut. This is our expectation, and we did recommend to the bank that they go with a 50 basis points cut. Market is pricing it. The consensus of economists is expecting it. So, it would be a surprise if we did not get that. The language will be very important for the next steps after that. So, does the Bank of Canada signal that they will be accelerating and get to neutral as soon as this winter, or do we do like a 50 basis points now cut just to accelerate the process and then continue with 25 basis points cut and just make sure that we're taking our time here? We need to get to neutral as quickly as possible, so we'd expect them to rush it a little bit, but the language will be very important. Decision is out next Wednesday, just before 10 a.m. Eastern time. Retail sales in Canada also will be out. In the US, S&P Global PMIs, the manufacturing one has been suffering recently. Services have been strong. Let's see if things continue. And new home sales in the US. So that wraps it up for the week. Always a pleasure to serve you. If you appreciate the content, don't hesitate to share. Of course, come back again next week.